Hello, friends. Today I have a wonderful guest, Mr. Gaurav Jain of Bajaj Finserv AMC. Let me formally introduce you to you. Mr. Gaurav Jain has come with 8 years of experience in the financial service industry. He's a CFA charter holder and previously worked as equity research analyst and also in the product team. Currently at Bajaj Finserv AMC, he is a product specialist where he communicates Bajaj Finserv's views on market as well as on investment strategies with distribution channels and corporates. And also, he is a certified QPFP from Network FP team. And happy to invite you, Mr. Gaurav.
Thank you,
Welcome,
Venkat
sir.
sir. Thank you for inviting me.
Yeah. It's a pleasure to know. And we both are members of Network FP. I am also an pro member of Network FP. Since I
Oh,
have done CFP, I have not done the QPFP in that way. That's fine.
that's
And
good to know.
just wanted to give a small introduction about Bajaj Finserv AMC when they have launched. And can you just give us a brief introduction about it?
Sure. When it comes to Bajaj AMC, we launched almost a year back. And, in this last 1 year of journey, thanks to all your support, we have already garnered an AUM of more than 17,000 crores. And, we see this industry very seriously. We have a lot of plans, in the upcoming period. So that is has been our journey. Now, when it comes to Bajaj AMC, if you see our tagline is Parak Hai. So whatever we strive to do, be it the investment products or be it, the kind of various digital initiative that we try to come in, we try to create that parak, which we call as a difference to our channel partners, to our investors, and so on. So that is the entire ideology that we have. So that is how we intend to, to go in the upcoming period as well.
Wonderful. Yeah, it's been a very differentiated fundos is what I see from your product, and I have been very much fascinated by your Bajaj Finance Flexi Cap fund, which has completed 1 year, and the mega trends mapping which you do on choosing the stocks and mapping it to the different trends. Can you explain elaboratively how it is being done? And I also see that this is one of the fund which has got a very good active share
Right.
from the benchmark, which is a very unique value proposition. I
Yes.
would like to understand the process better. Yeah, exactly.
Sure, sure. So, before I begin discussing about our FlexiCap fund, let me also throw highlight about, the investment philosophy that we use, which we call as InCube philosophy. Now, this InCube philosophy is a general investment philosophy that we use across our different products. Now, each and every product has its own unique way of selecting stocks and has its own investment philosophy. So, but then talking about, the word the investment philosophy that we're discussing, it is called as InCube. Where, and the background of this InCube philosophy is that, when we launched our AMC 1 year back, one common trend that we were witnessing at that point of time was that more and more active managers, they were finding it difficult to outperform the benchmark, right? So when we try to evaluate what are the various reasons because of which they are finding it challenging, one common reason that came across was that if you look at the Indian equity market today, it is becoming more and more efficient, right? So while 15 years back, 10 years back, it was very hard to gather and collect that superior information. Today, if you see, there are various umpteen websites available where you can extract that information, right? If in case you want to get any information about any company, you can just go to screener.in, you can go to Trendline. There are
Yeah,
various umpteen websites available, right?
correct.
So, in order to provide that good experience to the investor, we have come out with this InCube philosophy, where the letter IN in InCube stands for information edge, the letter QU in Cube stands for quantitative edge, and the last two letters, which is BE, stands for behavioral edge. So we
Behavior.
intend to, to create three different layers of expertise in this entire process, which we feel is going to be benefiting our investors when they are going to be investing in our various funds, right? So, talking about the first aspect of our InCube philosophy is information edge, where we strive to collect the superior information which can help to create good experience and create good value addition to the portfolio, which can help in outperforming the benchmark over a longer period of time, right? But if you see, how do we do that? You can do that by looking at the annual reports of the company, analyzing them, talking to the management of the company, talking to the various experts in those industry, because of which you would be able to get that superior information. But again, if you see, today in our industry, we have 41 different AMCs who are almost analyzing similar companies, talking to the same similar management, talking to the similar experts. So just by using information, we feel it is not possible to consistently outperform the market over a longer period of time. So what we have also done, we have also added two additional layers of expertise in our InCube philosophy. So apart from information edge, we also have a quantitative edge. So in this quantitative edge, we have created a mathematical model. Now this mathematical model, we have backtested last 17, 18 years of data. So this model basically helps us to process information in a much better manner. So this model helps us provide signal, which will help us to take the right call at the right point of time, right? And the third and the most important aspect of our InQ philosophy is behavioral edge. Now, typically, if you see, when it comes to investor behavior, while we have been saying that the most rational way of investing into market is to buy low and sell high, right? But then when it comes
Yeah.
to reality, it usually does not happens, right? We have seen how the
Yes.
IT bubble panned out in 2000. We have seen, in spite of the valuations becoming quite attractive during COVID period, not many of us invested very heavily during that point of time.
Yes.
Similarly, today, if you look at where the max money is going into, it is going into thematic funds. And if you look at the themes, where this money is flowing into, you can see that a lot of money is chasing returns today, right? So while we have been saying buy low, sell high, usually does not happen. That is what we have seen from the
Yeah.
observation of how typical investor behaves. So what we have done in our behavioral process is that we have created certain frameworks. I'll show you certain frameworks, which we use. So you can see this is our investment philosophy. This is the research process, and you can see these yellow boxes. These are the various behavioral screening processes or the processes that we use from the behavioral side, right? Say, suppose for an
Mhm.
example, you can look into behavioral screening. Now, the beauty of the market is at any point of time, there are certain sector where there is a lot of greed and fear, right? On the other hand,
Yes.
you can also see there are certain sectors where, which could be getting into a lot of pain over the last 2 to 3 years. And because of the temporary problems that this company have, they would have got corrected. And many of these companies today are available at attractive valuation. So by doing this behavioral screening process, what we intend to do, we typically try to avoid those sectors where there is a lot of euphorism, lot of greed. On the other hand, we increase our exposure, towards those sector, which in spite of some temporary problems, if we find that there are good quality companies which are corrected and are available at attractive valuation, we tend to increase our exposure more towards those sectors and those stock, right? So that is
Yeah.
one of the screening process that we use on the behavioral side. Let me also talk about the other screening process that we also use on the behavioral edge, which we call as pre-mortem, right? Now, what typically happens in the case of post-mortem? If you see the layman example or layman term of post-mortem, it is you post death analysis of any particular person, right? So that is the layman meaning of post-mortem. But then when it comes
Yes.
to pre-mortem, if you look at our investment team, before investing into any stock, they try to evaluate
Mhm.
what could be the possible scenarios that could happen after I invest into that stock. Say for an example, if our fund manager or if our investment team wants to invest into tire company. So before investing into that company, they try to evaluate what will happen if the raw material prices goes up. What will happen if the rubber
Mm.
prices goes up? What will happen if the competition increases the capacity, right? So by evaluating all these various scenarios before investing into stock, we already know, what could be the possible scenarios, and if these scenarios happen, what is the rational decision that we need to take. Now, the beauty of doing that is that when we invest into that stock, and if say that particular scenario happens, so rather than getting emotional, we already know what is the right rational decision our investment team needs to take. So that is the
Yeah.
comprehensive set of processes that we have taken on the behavioral edge. Now, by doing this, by having this various behavioral frameworks, it is going to be providing us two benefits, right? Now, if you also see investment team, we are also human beings, right? So by having these various behavioral processes, it will help us to get or avoid getting into such behavioral pitfall. Secondly, it will also help us to take the advantage of any mispricing that happens because of the greed and fear that people display. So that is the common framework that we use, which is InCube philosophy, which helps us to provide three expertise edges, across our investment philosophy. So that is, the normal philosophy that we have. Now, as you ask about our FlexiCap fund, let me also talk about, what is our FlexiCap fund and what is the unique proposition that we have. So if you look at, the normal FlexiCap funds that are available in the market, right? So the common strategy that get used in FlexiCap category is buy and hold, where you say do research and identify 50 to 70 good quality companies, and you remain invested
Yeah.
into them for a longer period of time, right? But then, very interestingly, if you see over the last 6 to 7 years, you can see there is a lot of disruption which is happening in various sectors, right? If you see IT, there is disruption happening in the form of AI. There's a lot of artificial intelligence disruption which is happening. If you see
Yeah.
automobile, there is disruption happening in the form of EV. So, because of this various disruption which is happening, when it comes to our FlexiCap fund, rather than using buy and hold approach, the kind of approach that we are going to be using is buy and watch, where we are still going to be buying good quality companies for a longer period of time.
Mm.
But then we're also going to be closely watching the trends that are evolving in those various sectors, right? So that leads to the concept of mega trends that we are going to be using in our FlexiCap fund. So
Yes.
if you see, the trends, right? The normal definition of a trend, and there are various kinds of trends which are possible. Some trends are cyclical, say they pan out in one quarter and then they subside in the second quarter. These are more cyclical in nature. And there are certain trends which are of short duration period. Let's say they will work out or they will pan out for the next 2 to 3 years, and then slowly and steadily they start fading out. But then when it comes to
Yeah.
mega trend, which is where we are going to be focusing, these mega trends are typically long-term trends, the impact of which you can feel across sectors, across regimes, and these are multi-decadal in nature. Just to give an example, if I take you back to late 1990s, if you see, there were two trends that were panning out, both from the global context as well as from the domestic context. On the global context, because of the technology advancement that happened, people could sit at any point of the world and do their job, right? And what
Mm.
happened domestically, if you see in IT sector, many smart English speaking people, they were available in India at a reasonable cost. So when these two trends combined in India, it created a very big mega trend from the Indian IT sector. And we all know the
Mm.
kind of returns which IT sector has delivered over the last 15,
Yeah.
20 years period, right? So that is, the mega trends that we are going to be focusing. Now, when it comes to our FlexiCap fund, there are six mega trends that we are going to be focusing. Or, there are six sources of mega trend that we are going to be looking for stock selection in our portfolio. So I'll also show you the slide. Say for an example, if you look at, you can see there are six trends that are, there are six sources of trend that we are going to be focusing. So the first source of mega trend that we intend to find opportunity is technology. Now, typically, if you see, whenever people hear about technology, people feel that it is going to be benefiting technology sector only, but then that is not appropriate. So when technology advancement happen, it is also going to be benefiting various other sectors as well. To just put things into
Correct.
perspective, if you see, the kind of value of UPI transaction that is happening, that has just happened in the month of July, it was about 20 lakh crores. So that is, how technology advancement is also going to be benefiting various other sectors such as banking and so on. So we have companies in our portfolio which is going to be benefiting out of this technology mega trend. Now the second trend or the second source of mega trend that we are going to be focusing is regulatory. Now, over the last 3 to 4 years, we have been hearing about the China Plus One, Make in India, and when we are talking to the companies today, they have been communicating that this auxiliary demand that is coming from the supply shift or supply chain shifting towards India, there are also a lot of companies which are benefiting out of it. Now, on a very recent scale, if you see, something very interesting that has also happened in China, which is Biosecure Act, where because of this Biosecure Act, which has come in China, many of these Indian pharma companies are going to be benefiting in the upcoming period. So this regulatory change that has happened, that is happening today in US market, it is also providing a lot of opportunities in the pharma side, which we are looking at, and we have companies in our portfolio which is going to be benefiting out of it. Now, the third
Yeah.
source of mega trend that we have in our portfolio is economic. So as economic prosperity happens, as we move from unorganized to organized, as there's a lot of formalization that is happening, many companies are going to be benefiting, right? So if you see many of the retail companies on the the organized side are benefiting from this trend. So we have
Yes.
companies which are benefiting out of
Thanks to GST and other things.
so,
Yeah.
so we have companies, which is benefiting from this economic prosperity of India. India is expected. We see today India, we are the fifth largest economy, and by 2030, it is expected that we are going to be surpassing Japan and
Correct.
Germany, and
Yeah.
we are going to be becoming the third source or the third largest economy in
Correct.
the world. So when that happens, there are various sectors, there are various companies which is going to be benefiting from this theme that is going to be playing out, and we have selected companies in our portfolio which is going to be benefiting out of it. Now, the fourth source out of these six sources that we're also going to be focusing is nature. Nature, again, as you see,
Mhm.
there's a lot of trend, or there's a lot of benefit which many of these renewable companies are going to be getting. We are also finding many of these EV companies, which is going to be benefiting in the upcoming period because of this nature mega trend that is playing out, right? Now, the beauty of our portfolio is that it is not just going to be looking into companies which are going to be directly benefiting from these mega trends. We are also going to be looking at and finding companies which is also indirectly going to be benefiting out of this mega trend. So, just an example, when I talked about this nature trend, now if you see, the vehicle size, or the weight of EV vehicles, they are having about 20. They are about 20% heavier as compared to normal vehicle. And the reason why they are heavier
Mhm.
is because of the heavier battery size as compared to normal vehicle. Now imagine, when more of these EVs start running out, or they start panning out, and they start running on our normal roads in the upcoming period, what will happen to the tire? Because of their heavier weight,
It will,
these EV
yeah,
companies which are more
one
heavy,
and
there
yeah,
is going to be more tear and wear of
wear
the
and tear.
as well,
Yeah.
right? So even tire companies are going to be benefiting as this EV theme plays out in the upcoming period. So we also have such opportunities in our portfolio, which is also going to be indirectly benefiting out of this mega trends which is going to be playing out. And
Super.
the fifth source of our mega trend is basically demographic dividend. So as the disposable income increases, right? So people are spending today more. Is it really visible in the numbers of the corporate profits? We can see, if you see the share of SUV in the entire PV segment, it has gone up consistently over the last 5 to 7 years, right? Even if you see the
Correct.
consumption, the higher end consumption has been increasing. So as India moves from 2,500 GDP per capita, we have seen in various countries such as China, the discretionary spending increases. So as it increases, it is going to be benefiting various sectors such as consumption. It is going to be benefiting discretionary spending. So we have companies in our portfolio which is going to be benefiting. I'll also show you, the mega trend mapping that we have, where we have shown every company that we have in our portfolio and what is the mega trend that company is going to be benefiting, right? So before that,
Yeah.
the last source out of these six sources of mega trend is social. So social is where it basically maps the kind of lifestyle changes that are happening today. Say 30 years or 40 years back, people hesitated to go to hotel. They preferred eating at their home only. Then there used to
Yeah.
be a time where people started going to hotels. People started visiting restaurants. And today, there's a trend where people are sitting at home and people are ordering from various websites which are available today. So that is the trend that is evolving. So we are also capturing the opportunities that are evolving from this social pattern change that is happening from the demographic angle. So these are the various six sources of economic, six sources of mega trends that we have. And if you see, the beauty of it is that if you see this particular slide, so, this is the slide of megatrend mapping, where as I discussed, there are six sources of megatrends that we intend to focus upon. And you can see we have mentioned each and every company that we have in our portfolio. And we have also mentioned which mega trend that particular company is going to be
Yeah.
benefiting, right?
Tag to. Yeah. Correct.
Say for an example, just to name an example, if we have HDFC Bank, So you can see we have mentioned that HDFC Bank is going to be benefiting from technology megatrend. It is also going to be benefiting from economic prosperity that is going to be happening. So the reason of doing that is that the investors, our investors who are going to be investing in our scheme, should be able to know that if we have any particular stock in our portfolio, there is also a reason why we have that stock, right? So that is the
Yes.
reason why we have this mega trend mapping, in our PPT as well as the various notes that we provide. And also, if you see the second part, the second unique proposition of our flexi cap fund, we have been quite vocal that when it comes to managing our flexi cap fund, which is an active fund, we are going to be managing it very actively. To put things
Okay.
that into perspective, if you look at this slide, if you look at the right box, it shows what is the active share of my portfolio as compared to benchmark. So what do I mean
Hmm.
by active share? That typically means how much is my portfolio different as compared
Deviate.
to benchmark weightage wise, right? So you can see about 68% of my portfolio today is different as compared to benchmark. So while we launched this fund almost a year back, and I know this fund has been able to give good experience to the investors over this journey. But then the idea here is that we have also actively managed the fund, not just today. If you look at month-on-month basis, also our active share or our portfolio has been different as compared to benchmark on an average around 65 to 66%. So that is how
Yes.
we have navigated our FlexiCap fund, and this is how we intend to capture opportunities. So when it comes to a
Yeah.
flexi cap fund, it is true to label flexi cap. You would not find that it is
Correct.
typical large cap exposure.
True.
Now there's a reason why we chose megatrend concept in our flexi cap, right? Because if
Yeah.
you see when megatrend plays out, there are certain megatrends which are going to be benefiting more mid cap and small cap companies, right? So if you look at
Yes.
our portfolio also,
Yeah.
just to put things into perspective, there are a lot of chemical companies, there is a lot of hospitality companies which are more present in mid cap and small cap space, where some of these
Correct.
mega trends are playing out. So by having a flexi
Correct.
cap nature, our flexi cap fund truly captures the mega trends that are playing out in India. So that is how
Yes.
we are managing our flexi cap fund.
Yeah, yeah, and thanks for the wonderful and detailed run through of your FlexiCap fund, which is present across the spectrum. And now let me come to the Warren Buffett's famous quote on Moat, which
Yes,
he says that one thing which will help the companies to stay irrespective of the market volatility or global headwinds or whatever you call. So
yes,
your Bajaj Finserv large and mid cap fund carries that Moat mapping.
more
Can
mapping.
you throw light on that?
Yes,
Yeah,
definitely. So before I talk about economic modes, right, let me also
yeah,
explain why this concept of mega or economic modes is very important. So let me take you back to 1995. So if you go back to 1995 and take the top 500 companies that were listed on our stock exchange on that in 1995, right? And if you see the performance of these 500 companies over the next 25 years period from 1995, right?
mhm,
Now, out of these 500 companies, there were just 20% of these companies which were able to outperform the benchmark over the next 25 years period from 1995, right? So when we try to evaluate, over this 25 years period from 1995, why only 100 companies were able to outperform the benchmark over the 25 years period?
mhm,
Why the remaining 400 companies were not able to outperform the benchmark in this 25 years period from 1995, right? So when we did that study, interestingly, if you see, these 100 companies, had something very unique. They had a competitive
mhm,
advantage. They had some unique proposition because of which they were able to protect their market share over this 25 years period. They were able to protect their margins. And because of this particular competitive advantage that these companies had, these companies were able to outperform, as compared to benchmark, which was not possible, as compared to the remaining 400 companies. So that is the concept that we are going to be using in our large and mid cap fund also. If you look at our portfolio, we have identified 8 different sources of economic modes, right? Now, the
mhm.
interesting part about India or any other part of the world, say whenever any company becomes successful, any product or any service of any company becomes successful, what typically happens is that there are 10 new different companies which also come and they start replicating and they start having similar kind of products, right? Just to put things
Yes.
into perspective, I was in Rameshwaram Cafe in Indiranagar about 2 years back, and there was just one Rameshwaram Cafe. Today, in that just 1.52 kilometer radius, I can see there are a lot of different cafes which are almost providing a similar product, right? So that typically happens when you have something, very successful. Now, if you have something successful and if you do not have any unique competitive advantage, because of this replication that happens, so when this unique proposition is not there, many of these new
Mm.
competitors, they try to take away your market share, and they are successful if
Market
you're
share.
not having
Yeah.
that unique proposition, right? So in this competitive world that we are into at this point of time, it has become all the more important to invest into those companies which have some kind of economic moat, which is a unique competitive advantage. So when it comes to our large and mid cap fund, we have identified 8 different sources of economic moats where we are going to be identifying opportunities, right? To put things into perspective, let me also show that particular 8 different sources of economic moats. So the first source of economic moat that we intend to find opportunity is brand strength. So what happens in the case
Mm.
of brand strength is that when your company is having a very good brand, people trust you a lot, and it helps you to protect your market share over a very longer period of time. Just to put things into perspective, if you look at Nestle, right? Now, if you imagine the kind of market share that Nestle has towards its instant Cerelac powder, which is Cerelac, it is about 96%, right? So that is happening because of the kind of brand that Nestle is enjoying today. Again, just a disclaimer, all this talk that we are talking today is just for
Yeah.
educational purpose. It is not any recommendation.
Correct.
But then again, that
True.
talks about the kind of strength which your particular brand typically enjoys, right? So we have companies in our portfolio which are enjoying because of this brand image that they have. Now the second source of economic moat that we have in our portfolio is unique competitive advantage, which is cost leadership. Now, typically, what happens, there are certain companies, because of their operational efficiencies, because of their expertise, they are able to bring down their cost, which is one of the lowest in the entire industry. So that is what we also do in our portfolio. We have companies in our portfolio which are the cost leaders in their respective segment. Now, when these companies are able to manufacture products at a very low cost, imagine when a company or when that particular sector is going through a down cycle, that is where because of this lowest cost advantage they have, they are able to increase their market share, right? So that becomes a very good competitive advantage during, more specifically during a down cycle that happens. Now, the third source of economic moat that we have in our portfolio is network effects. Now, let me give an example. So, if you take platforms such as Naukri.com, so when more and more people start uploading their resume, Naukri.com as a platform becomes all the more valuable for recruiters. So similarly, we also look out for opportunities. We also look out for platforms, where this network effects plays out, and it benefits companies, right? We have, if you see, we have various companies in the wealth management industry today which are benefiting from this network effects, right? So we intend to invest into such opportunities as well. The fourth source of economic moat is basically intellectual properties. We have companies on the pharma side, which are benefiting out of this. And the fifth source of economic moat is switching cost. Say, suppose for an example, if you look at many of these IT companies, many of these pharma companies, and many of these banking companies. Now, typically, when I go to bank, the RM of that particular bank says, "Why don't you, also buy loans? If you have a four-wheeler loan, why don't you look out for personal loan also?" So he tries to cross sell me a lot of products. So when he does that lot
Yeah.
of cross selling, it creates a very stickiness when it comes to the kind of bank that I'm going to be dealing with. So if I want to switch over to some other bank, I would be thinking twice before switching over that. And why
Mm.
do I have to do that? Because I've already been taking a lot of
I have
services
to change
in
everything.
the bank,
Ah,
right?
yeah.
So that is the power of switching cost. We have companies on IT, we have companies in various other sectors also, which are benefiting from this economic mode, which is switching cost. And lastly is the unique business model, right? Certain companies today are having such a unique business model that it is becoming very difficult for the existing or new companies to replicate that. So again, just like we saw in the case of megatrends, here also you can see this is the chart of our mode mapping. As I discussed, there are 8 different sources of economic modes that we're going to be focusing. And you can see for each and every company that we have in our portfolio, we have mentioned which economic mode that that company is going to be benefiting, right? So that is the benefit of economic mode. Now, when you have an economic mode, you can see what typically happens is that because you have some competitive advantage, you are able to protect your market share as well as sales over a longer period of time. So as you can see from
Yes.
the slide, this is an example of your two-wheeler company, which was quite focused in the kind of category that it wanted to cater to. It focused on the higher end, two-wheeler bikes. We all know, the kind of company that we're talking about. It is Aisha
Yeah.
Motors. And what happened because of that? If you see the 10 years performance over the long period of time, because of this unique competitive advantage that it had, it was able to protect its profits, at a longer range. And if you see the average profits or ROE of this company, even that, it got protected because of this competitive advantage, right? So that is what we are going to be doing in our large and mid cap fund. It is a quality portfolio. All the companies that we have in our portfolio are benefiting from some unique competitive advantage that they have. And we feel, looking at the current situation where there could be uncertainty both from the global and the domestic angle, we typically feel such good quality companies which have some unique proposition would be able to navigate the current market scenario in a relatively much better manner. So it's more of a relevant portfolio, considering the current situation. Now, again, here as well, if you see the active share of our portfolio, 67% of our large and mid cap fund is different as compared to benchmark. So here as
Oh,
well, we are managing our fund, which is different as compared to benchmark. So that is how we have managed our large and mid cap fund as well. You can see while our flexi cap fund focuses upon the mega trends that are playing out in India, uh, our large and mid cap fund tries to identify and invest into companies which have some unique competitive advantage. So that is how we have been managing both our funds, the flexi cap as well as the large and mid cap.
yes, yes. In fact, your fund house has been doing an exceptional job in mapping those trends and identifying those companies. And in fact, I also wanted to discuss more on the other funds also, which has got similar mapping.
Yes.
With the passage of time, we will have it in the future sessions. And I thank you very much for running the detailed presentation and making my investors to understand about your process and how you map the different companies to the different uh, theme of the fund. And it was a very insightful conversation, and we look forward to connect with you more also in the future on the other funds which has been there, something like BAF and the multi-asset allocation also. And we thank you for your invaluable time in coming to the any message you would like to share it to my viewers through this channel. Final thoughts.
The thing that I would like to say is that if you see what has happened over the last 1.5 year period, is that the market has been quite supportive, and in that
Correct.
period, rather than looking at the performance, it has become all the more important to look at the processes which the funds
Yes.
have used, to navigate the market and deliver that kind of experience. Because what we
Correct.
feel, when the processes are appropriate, eventually the returns are the outcome of the processes that you're going to be taking. So if
True.
you also look at our funds, right? If you look at the example of our flexi cap fund, or if you take the example of large and mid cap fund, we have also showed how we have navigated the various sectoral allocation to our funds over the last 1 year. So in the case of our flexi cap fund, we those sectors, as I talked about, there is a concept of behavioral screeners that we used, right? So there were certain sectors which had higher weightage when we launched our fund, and certain sectors had performed very well in a very short span of time. They were able to give very good returns. And if you see the month-on-month performance or the month-on-month sectoral allocation to these various sectors, such as capital goods, as well as the auto, if you see the various sectors which has performed very well, what we have done, we incrementally decrease the exposure there. So we created alpha for
Hmm.
investors. We also locked that alpha by downsizing our exposure wherever we felt the valuations were on the upper side. On the other hand, there were also certain sectors such as pharma, such as your chemicals, such as the consumption, where we felt, in spite of the negative sentiments that was prevailing in those sectors because of the consolidation that was happening, in spite of all these things, there were attractive opportunities that was available. And so what did we do? We incrementally increase our exposure to those sector where earnings
Yeah.
growth looks reasonably better in the upcoming period. So that is how
Yes.
we have
Currently
navigated.
looking at a valuation perspective. Yeah.
So that is how we have navigated our journey over the last 1 year period.
Super.
Thank you.
Thank you very much, sir. And we look forward to connect with you in the future also on different things. And thanks for your valuable inputs.
Sure. Thank you. Thank you so much. The pleasure is mine.